Hey everyone, welcome back to Corporate Decoder, the place where we find out if this company is playing with a full deck or if their numbers are more slippery than a greased eel. Get ready because today we're diving into Quanex Building Products Corporation's latest report, and let's just say there has been a change of the guard in the accounting department. Alright folks, so what we've got here is a current report basically telling us about some pretty significant changes happening at Quanex Building Products. Think of it like a company's urgent bulletin board, letting everyone know what is what right away. And the biggest news, they've switched their main accountants. So, the big shuffle happened on the 13th of January 2026. Quanex Building Products decided to bring in KPMG LLP as their new official number crunchers. The folks who will be checking all their financial statements for the year ending the 31st of October 2026. This means that the previous accounting firm, Grant Thornton LLP, is out. Yep, immediate dismissal. That is like telling your chef they're fired mid-meal. It signals a pretty decisive move by Quanex. Now, you might be wondering why this happens. Companies switch accountants for all sorts of reasons. Sometimes it is just to get a fresh perspective, especially after a long relationship. Other times, it can signal a need for change if there are underlying issues, or if the company is heading in a new strategic direction. Now, the report assures us that this wasn't due to any major fights over accounting rules or how they reported their finances. That is good to hear. It means Grant Thornton wasn't forced to write a negative opinion or put a big warning sign on their reports. Their audits for the past couple of years, ending the 31st of October 2025 and the 31st of October 2024, were clean in that regard, but, and this is a pretty big but, there was something else. The report mentions a material weakness in their internal controls, specifically regarding how they prepare and review their cash flow statements. This isn't ideal. A material weakness means there is a significant chance that errors in their financial reporting could go unnoticed. And guess what, folks? Grant Thornton's reports actually had an adverse opinion on these internal controls. That is a formal way of saying they found a significant problem. Their reports basically stated that the company wasn't effectively managing its internal financial reporting at the end of those fiscal years. This material weakness has been a known issue. Management themselves flagged it back in the fourth quarter of 2024. It is still there. According to this report, they've been talking about this problem in their previous annual reports. So it is not a brand new shocker, but it is definitely something that likely contributed to the decision to bring in a new accounting firm. Having your auditors issue an adverse opinion on your internal controls is a pretty serious red flag. It suggests that maybe the left hand doesn't know what the right hand is doing when it comes to keeping the company's financial house in order. So what happens now? Quanex's audit committee has given Grant Thornton the green light to spill the beans to KPMG to answer all their questions about what went on. This is standard practice. The new auditors need to understand past issues so they can properly audit the company going forward. And for transparency, Quanex has filed a letter from Grant Thornton confirming their statements in this report. It's like a notary signing off on the divorce papers, making sure everyone agrees on the terms. So, the appointment of KPMG is official. They're on board and ready to tackle the books for the upcoming fiscal year. Interestingly, the report also states that Quanex has not consulted with KPMG on any major accounting issues or specific transactions before this appointment. This suggests that KPMG is coming in essentially fresh, without prior involvement in any of the company's recent financial decisions or complex accounting matters. That might be a good thing, ensuring an unbiased assessment from day one. And finally, the report lists the exhibits. This includes that letter from Grant Thornton we just talked about, which is Exhibit 16.1. There is also Exhibit 104, which is an interactive data file, basically the filing formatted so computers can easily read and process all the information. This is pretty standard for SEC filings now. So, what is the big takeaway here for Quanex Building Products Corporation? They've made a significant change in their auditing firm, bringing in KPMG to replace Grant Thornton. While there were no outright disagreements on accounting principles, the persistent material weakness in internal controls over financial reporting, especially concerning cash flow statements, seems to be a major factor. Grant Thornton issuing adverse opinions on this for 2 consecutive years is a serious sign. This suggests the company has been grappling with internal control issues, and perhaps the board felt a new set of eyes was needed not just to audit, but to help get those controls in shape. The swift dismissal indicates a strong desire for immediate change. The new firm KPMG is coming in with a clean slate regarding prior consultations, which could mean a truly fresh start in financial oversight. From a Warren Buffett perspective, while a change in auditors isn't always a bad sign, it definitely warrants a deeper look into the why. The focus on cash flow controls is key for any business, as that is the lifeblood. If those controls are weak, it opens the door for all sorts of problems, from simple errors to outright fraud. Quanex needs to show significant progress in fixing these internal control issues. Otherwise, It could deter investors and make it harder for them to operate smoothly. The direction seems to be towards tighter financial discipline, signaled by this auditor switch. A notable risk remains the effectiveness and speed of remediation for these control weaknesses. The opportunity lies in a more robust financial reporting framework under KPMG, which could lead to greater investor confidence. My conclusion is that this is a positive step, signaling the company is addressing a critical weakness, but the real test will be in how effectively they implement improvements and how that reflects in future audits. Alright, that is our breakdown of Quanex Building Products' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.